Hello everyone, and welcome to another episode of the Daily Gwei Refuel, where I recap the latest news in the Ethereum ecosystem. I'm your host, Anthony Sassano, and today's the 4th of May, 2022. Alright everyone, let's get into it. So, Saj Z from the Hyperledger Besu team today published a new kind of, Notion site called Testing the Merge, which is a merge testing leaderboard. So if you head over to this site here on Notion, I don't think it requires an account to kind of view this, but you can kind of see here and see everything there is going on with the merge testing. Now, I've spoken about this a lot in the past, like how testing is obviously really critical to the merge and to getting it done as quickly as possible. And there's a lot of testing going on right now. It's pretty much in those kind of final stages, right? Because the spec's done, the client implementations are pretty much done. They're just kind of being tested in order to essentially make sure that it all works and we don't have critical bugs and all that sorts of stuff. So that's kind of what's been going on the past few months, and this is kind of this new dashboard is basically documenting that with a bunch of different resources, tweets, all that sorts of stuff here. So you can see the merge testing leaderboard on the top of the page here, where you've got different kind of operators within the ecosystem, such as Lyra, Rocket Pool, Uniswap, etc., what category they fall into, if they're actively testing, what date kind of it was tested, and with links to tweets and all that sort of stuff there. So if you're interested in following along even closer with the merge, with testing around the merge, definitely check out this leaderboard. It's a really great resource. And yeah, I'll link it in the YouTube description for you to do so. All right, so Jasper, I should call Jasper maybe a Rocket Pool mega fan, shared today a GitHub kind of pull request that proposes a consensus change to the beacon change that could reduce Rocket Pool's collateral requirement by multiples, potential for single-sided RPL staking, and native customizable staking as a service layer so that anyone can scale an operation. Now, I guess in plain English, I think, what I take away from this is that, let's take a step back. Let's put some context around this. Rocket Pool has, I think, suffered, their growth has suffered mostly from the fact that they're limited by how much kind of RETH that they can mint, because of the fact that they have to have that 16 ETH kind of minimum collateral requirement. Now, I think they want to bring this down to 4 ETH or something like that, so that they can obviously be a lot more capital efficient and mint a lot more RETH, so that a lot more stakers can get involved, a lot more people can get involved within Rocket Pool. And I think because of this limitation, a lot of people have actually gone to something like Lyra, and that's actually made Lyra kind of a little bit of a centralizing force within the ecosystem right now. And I spoke about them on the 2-hour marathon episode I did on Monday, so I'm not going to rehash that there. But if this change was to kind of be implemented, it would really help Rocket Pool out. But you can read kind of here, I'll link this in the YouTube description. You can read the full kind of breakdown, and you can read replies from various different people in the Ethereum ecosystem. It only got posted, I think, yesterday, or just kind of earlier today. So there isn't much discussion going on now, but there's also links to previous discussions around this and stuff like that. So definitely check this out for, I guess, kind of a read on this and what's happening in the in this kind of world here. But I think I guess I wanted to add a little bit of my thoughts around not just kind of these changes, but just pooled staking in general, and kind of how it's a bit unfortunate that kind of Rocket Pool, they worked for so long to get to the point that they're at today, and then they're still limited by by that kind of that 16 ETH limitation there, whereas something like Lyra isn't. But this goes back to my previous point, and I've brought this up a lot, about decentralization, actual decentralization, being really, really hard. You could solve, as I've said before, you could solve every single issue in this ecosystem by just centralizing it, but obviously that defeats the whole purpose. And doing things in a decentralized way doesn't always get rewarded. Obviously, Lyra is not a decentralized staking protocol, at least not as it exists today. But the thing is, because of that, they're able to scale up a lot faster, and they've been able to capture a huge part of the kind of staking market. Now, that's not to say that it's always going to be like that. That's not to say that Rocket Pool can't keep scaling up and can't keep succeeding. I think they can, but due to these kind of hard limitations that they have, things need to change, on kind of the protocol layer, which just makes it harder because that's a slower moving layer than something else. So I don't want Rocket Pool to centralize to fix these things. I would prefer Rocket Pool to stay decentralized, but it usually takes longer for the decentralized kind of option to, I guess, grow or win out, especially when they have kind of like these limitations on them. Now, I wouldn't consider that like a bearish thing. It's just kind of like a design decision at the end of the day, or a design choice, I should say, at the end of the day. And it's just kind of like the way it is. Now, I do wish that we had kind of like more competition or more players in this ecosystem than just Lido and Rocket Pool right now. There are others that I know of out there, such as like Stakewise and Swell and things like that. But they're either not live yet, live in limited capacities, or just failed to gain traction. And I think that it's kind of bizarre to me that this has kind of like happened, because the staking, I guess like the liquid staking or the pooled staking opportunity in Ethereum is absolutely massive. And as I said before, I think that we may see a reshuffling post withdrawals, and we're going to see how kind of like people kind of, maybe some people will shuffle out of being a solo staker and they'll go be a pooled staker, or maybe some people will shuffle out of being pooled stakers and kind of go to solo stakers. I'm not sure how that's going to all play out. But I think that it's going to be interesting. And until then, it's I don't know. Like I'm looking at the validator queue right now, and like there's over 18,000 validators in that queue. That makes me really happy, because it means that more ETH is being staked, the network is becoming more secure. But then I look at where that ETH is actually coming from, and just from eyeballing it, it seems like 90+% of that ETH is going into Lido. And that's not healthy, guys. Like, it's not a good thing that 90% of the, or whatever percentage it is, it's a really high percentage, is going into one staking service provider. Now, don't get me wrong, it's better than it going to a centralized exchange, because at least Lido has, I think, almost 30 staking operators that they're kind of like using right now. So it's not just going into one central place. And I don't believe that the Lido protocol itself can control the ETH at stake or the validators or anything like that. I remember reading something about that. You guys can correct me if I'm wrong there. But still, we would like it to be like what it's like with client diversity, right? Distributed. We don't want just one kind of like service being, I guess, a high percentage of the network or anything like that. And I think that it won't be long term, but in the short term, it's kind of hard to tell. I think in the short term, Lido's been able to attract so much kind of like capital because of that liquidity begetting liquidity phenomenon that I spoke about the other day, where STETH is just becoming so liquid. So whales are very comfortable staking their ETH with Lido, because they're able to enter and exit at will with the STETH token, right, in one of these liquidity pools. But in saying that, our ETH has decent liquidity as well. But as I said, the problem is that not enough our ETH can be minted, because of that kind of like minimum 16 ETH required to spin up these nodes and things like that. So hopefully this proposal can help Rocket Pool out and help change that. Not sure on the timeline here of when this will be implemented, but yeah, cool to see this. I think it's kind of like a great idea. I think that anything we can do to help Rocket Pool continue to grow and not be limited by these kind of like hard design limit kind of like choices that have been put in place, I think the better it will be for the entire ecosystem. All right, so HopProtocol has basically announced their token today. They published a blog post called Building Bridges. And at the end of this blog post, they basically said, we're excited to announce that we'll be decentralizing HOP's governance and turning it over to the community to guide the future of HOP. Stay tuned, details to follow this week. So that to me is an obvious token announcement. If you have used HopProtocol in the past, maybe you'll be getting an airdrop soon. I'm not sure, but I've spoken about HOP plenty of times on the Refuel. So if you haven't farmed the airdrop at this point, then maybe you won't get it. I don't know. I don't know what the airdrop criteria is going to look like. Maybe it looks more like Optimism's than a typical airdrop. Who knows? But yeah, this is just, I guess, another protocol that is looking to decentralize, looking to kind of like I guess create a DAO, hand ownership over to the community, all that good stuff. And, outside of that, HopProtocol has actually been growing quite well without, I guess, like a token, right? So since last summer, Hop has grown to $130 million in TVL and $2 billion in cumulative volume for their kind of like assets that they support. So they don't support every asset. They only support a handful of assets, but they've been growing quite nicely. And they have a pretty big community as well from what I've seen. So cool to see them, I guess, like officially announce, I mean, in so many words, that they're going to have a token. They haven't explicitly said that they're having a token, but I mean, this is obvious that they're going to. Optimism did the same thing, where they basically kept teasing, we're basically decentralizing the protocol. We're kind of like, going onto the next step of Optimism, and that's exactly what Hop is kind of like saying here. So expect the token announcement later in this week, I would assume. Maybe on the weekend, we'll see. Obviously, I'll cover it on the Refuel when that happens. But yeah, no further details at this point about what distribution is going to look like, what an airdrop is going to look like, none of that sorts of stuff there. But I'll keep an eye on it and keep you guys up to date. All right, so speaking of Optimism, today they announced their first, I guess, OP stim pack, which is activating a pool of 230 million OP tokens to incentivize project growth on Optimism. This is basically Optimism's liquidity mining program for their layer 2, which we all expected would come. Now, this is actually quite a large, I guess, like stimulus pack, if you want to call it that, or quite a large liquidity incentive, because if you take the OP token and you kind of like extrapolate how much it's going to be worth when it hits the market, let's say it's worth $1 when it hits the market. That's $230 million of incentives instantly, right? Let's say it hits $2, $560 million. I don't think it's far-fetched to say it could even go up to, something like $5, at least in the short term, based on, I guess, like the craziness of the markets and things like that, because that wouldn't give it too high of a market cap. I don't even think at $5 it would have a $10 billion market cap on a fully diluted basis yet. So imagine if it gets to $5, that's almost $1 billion in incentives that they're able to kind of like hand out here, which is very, very cool. So very happy to see this from Optimism announced so soon as well. But I think what is really cool is kind of, I guess, how this is going to all be managed. So this is going to be managed by the token house, of course, and then it's actually going to be managing different phases. So rollout will occur in two parts, phase 0 and phase 1. Phase 0 starts now and runs for 3 weeks, and it rewards early movers on Optimism who have demonstrated traction via on-chain criteria. So you can see the eligible projects here and what criteria they're going to be judged based on. So there's different tiers. Tier 1 is if the project has $100 million of TVL and 10,000 transactions per day on a 30-day average, then they're eligible to claim 3 million OP tokens. And then there's a tier 2 and tier 3 there as well. And then phase 1 is going to be open to any project that aligns with the optimistic vision and can demonstrate a clear path for using the OP token to incentivize future project growth and Optimism to the token house. And phase 1 begins after airdrop 1, which is still slated for Q2 of this year. I thought this was cool. I thought the name was cool as well, Stim Pack. I really like that name. But yeah, I mean, we've all kind of like been talking about this for a while now. I've talked about it a lot on the refuel about how these layer 2s do need token incentives in order to just bootstrap that initial growth. And I think that they've grown quite nicely without them. But yeah, I mean, it's going to be crazy to see how fast they grow with the token now, especially with kind of projects fighting for tokens for, I guess, their own projects in order to incentivize growth. It's going to lead to a really nice flywheel. And as I discussed the other day, a nicer flywheel is going to be that public goods funding that's going to come from this, because all of the, I guess, profits that are going to the centralized sequencer that Optimism runs right now is going to be funded through the retroactive public goods, which means more money is going towards kind of like public goods funding from this. So they're not just giving out tokens for the sake of it or to just bootstrap growth. They're also going to be bootstrapping, or at least kind of like starting that flywheel of kind of like public goods funding, which is really, really cool. So if you want to read more details about this, there's a blog post here titled A Summer of Optimism, where you can read everything about this stim pack. I'll link it in the YouTube description below for you to do so. And just before I move on from the Optimism stuff, MJS here from Lyra has kind of like put together a proposal for Lyra to kind of like get OP tokens. Now, I've spoken about Lyra plenty of times on the refuel before. They're building an options protocol on Optimism, native options protocol, as part of the synthetics ecosystem. So now they've kind of like put forward a proposal in order to get some OP tokens to continue their growth here. So, very, very cool. If you're into Lyra, if you're into options, if you want to check out their kind of like proposal, I'll link it in the YouTube description for you to do so. All right, so ENS today announced the official ENS Constitution book. The Constitution book is a beautiful artifact that represents the founding of the ENS DAO. So there are going to be 3 different versions of this book: a digital edition, a print edition, and a no expense spared limited numbered edition. You can get yours right now at constitution.ens.domains. The digital edition is unlimited. I think the print edition is also going to be unlimited to a certain kind of like time where people can just kind of like order this book and get it. And then the no expense spared limited numbered edition, I think there's only 50 of them and only 25 of them are up for grabs via some auction. So you can see here what this book is going to look like. So it's going to have a bunch of ENS names in it for people who signed the ENS Constitution. There's also going to be a kind of like people who had an avatar set for their ENS name will be featured in this book in a fully colored way, which is very, very cool. And if you'd like a physical copy, as I said, you can order them today, and they are printed on demand as well. It's not cheap, I believe, but I think the price, I can't remember what it was without shipping, but it's over $100 USD, but I think it's well worth it. As you can tell, I've already ordered my book here, and I also put a bid on one of these super limited ones, but the criteria for these is that I think let me have a look here. The criteria I read somewhere here. So bidding on it is limited. To qualify, you must have voted on the Constitution, and the person you delegated your votes to must have voted on at least half of all votes. If not, you'll have to buy a token off someone who did. So I did place my own bid on this, but I haven't gotten a book token yet. So I'm still trying to figure out how that works. Maybe I'm just missing something here. Maybe I'm dumb, but I did place my bid on it, but because I really do want to get one of those. But I did buy my unlimited edition anyway, just in case I didn't get one. But yeah, so the super limited edition is going to be, you know, embossed and printed slipcase with foiled leatherette cover, painted page edges, all the fancy stuff there. So I really do want that. I mean, I love collecting these things. You guys know I'm a big collector of certain things. But anyway, if you want to get involved with, get your hands on one of these, you can right now, as I said, at constitution.ens.domains. And buy one. I'm not sure when it's going to be delivered. As it's stated here, it's printed on demand, so it may take a bit longer than usual to get delivered here. But I can't wait to get mine, and it's really, really cool. Just something really cool that ENS has done, I think. And I think today is their 5-year anniversary as well of ENS. So just a little anniversary kind of, I guess, kind of like a thing, a little, I guess, like anniversary celebration from them as well. So definitely go get your hands on one by clicking on this link in the Twitter thread, or just going to constitution.ens.domains. All right, so Hagar here from Dune Analytics posted a great tweet today, basically highlighting something that I've been banging on about lately. But essentially, he just highlighted Dune's growth recently and about how they've been growing really, really nicely, even though the market is bearish. You can see here the amount of queries created per month is just kind of like up and to the right here. But I wrote today's newsletter about this, and what I wanted to kind of talk about was this concept of building through bear markets. Now, there's a few different things to talk about here. One is that, like, I personally think that there are, like, a lot of teams right now building in bear markets that no one's paying attention to. And, I mean, why would they? If the token's not going up, if the token's actually going down, if the market's quiet, people may not be paying attention to things like community calls, developer AMAs, you know, GitHub, like what's happening on the GitHub repos, all that sorts of stuff there. But this is personally, I believe, the best time to be paying attention to this stuff. I mean, using Ethereum as the quintessential example here, if you had been paying attention to Ethereum in 2018 and 2019, the peak of the kind of like bear markets, you would know that the building never stopped. And even in 2020, it can keep continued on. We got DeFi, we got like the Beacon chain spun up, we got all these cool things happening. We got the early signs of like actual layer 2s, like roll-ups and stuff like that happening. And you would have been able to stack ETH during that with confidence. And you would have done well for yourself. But on the flip side, and this is what I actually wanted to focus on, I think people get caught up in like looking at ETH and looking at the fact that it came back from a 94% drawdown and Ethereum went on to basically become as big as it has, and they apply that to their favorite project out of some bias. Now, maybe that bias is the fact that they're still holding the token and they're underwater on it, and they're hoping that, you know, and they see the project still building, and they're hoping that that building is just going to lead to better outcomes later on, and it's going to lead to the token increasing in price. Two things here. I mean, most of us would be aware that 90% of businesses fail after, I think it's 5 years or something like that, or kind of like even shorter than that, right? And that's non-crypto businesses. I would say that crypto businesses fail, like much more fail at kind of like a much faster rate. I would say that 95% of crypto businesses or crypto protocols fail within the first 2 years, 2 or 3 years maybe. So that's the first thing. So that means you've got like a 5 to 10% chance of actually hitting a winner. Doesn't matter if they're still building. They could be building something that no one wants. They could be building something that they get outcompeted on. They could be building something that's just a crap product, right? There's a million different variables that go into this. So just because a project is still building during the bear market doesn't mean they're going to succeed, and also doesn't mean that the value is going to flow to the token. And now, I think the quintessential example of this is the Cosmos ecosystem. Now, the Atom token hasn't really accrued much value. Since December 2019, I actually checked this today, it's down 80% against ETH. But the Cosmos ecosystem has developed a bunch of great products, or a bunch of products that actually do have a lot of usage. Some of you won't know this, but Solana actually runs on Tendermint, a consensus, which came out of the Cosmos ecosystem. The IBC bridging protocol is actually really cool. Came out of the Cosmos ecosystem. I believe Terra is also built on Tendermint, you know, again, Cosmos ecosystem. But the Atom token has not really captured any of this value, and that's because the tokenomics are really bad. It's not designed to capture this value, and from what I can tell, the Cosmos ecosystem, or at least kind of like the founding members and the higher ups, I guess you could say, don't really want Atom to accrue much value, which is bizarre to me, but that's kind of like my read on it. So you can have both, you know, very successful, I guess, like products in their own right, or very successful ecosystems, but the token doesn't capture any of that value. and then you can have like projects that are building, building really hard, building a lot of different things, and just building something that no one wants, right? And the product that fails. So I just wanted to kind of like highlight that, because I think too many people fall into this trap of, hey, they're still building, they're doing awesomely, they're doing great, like they're still going, there's all these products that they're releasing, and they think that's kind of like a sign of, the token's going to eventually go up, the token's going to moon, and everything's going to be well and good. That's not necessarily the case, guys. And then there's also the kind of like case of building going on, the products are awesome, but the token captures value, but then it only does that for a short period of time. And this usually happens during bull markets, not bear markets, where people get a false sense of security around their products and say, oh, wow, we have product market fit. But in reality, people were just using the product because they were maybe farming a token, or there were liquidity incentives, or everyone was just using everything in the hopes of kind of like making money or something like that, right? When in reality, it just wasn't real product market fit. So I just wanted to kind of like highlight that for you guys. I know there's been a lot of talk recently about value investing, which is the act of basically investing in things that are on public markets that may seem extremely undervalued because the market has been bearish and has just kind of like not rated these things correctly. You could have done this for things like synthetics and RVAR last bear market and made a lot of money, and maybe you can do things for certain protocols this bear market and make a lot of money too. But again, it's very, very hard to pick these things. Very hard. I mean, it gets harder as time goes on because just more projects are out there. I would say that, as I said, 5 to 10%. Like picking that 5 to 10% is really, really hard. And I would actually say it's less than 5% where the token would actually accrue value from the success of the ecosystem. So again, very hard to invest in these sorts of things. Not to say don't go for it, not to say you shouldn't kind of like try. But just be aware of all these things when you do that, because there's a lot more to it than just like looking at it and like, oh, okay, they're still active, they're still building, that means this is going to moon. No, that couldn't be further from the truth. And I just kind of like wanted to share that with you guys, because I've been there myself before. I've learned those lessons the hard way, and I just wanted to kind of like save you guys the heartache. But maybe you do have to learn the lesson the hard way. That's a good way to learn lessons in this industry at the end of the day. All right, so a tweet that I put out just before that I wanted to kind of like dive a bit deeper into was something that I said here. I said, the airdrop dilemma. You don't do an airdrop and the community hates you because they didn't get free money / responsibility. You do an airdrop and community hates you because the distribution isn't fair, aka they didn't get enough. Then the token goes to zero anyway. This is the kind of like dilemma that a lot of teams face, right? And we see this time and time again. Someone made a comment in the Discord channel before that apparently in the HOP Discord, people are already complaining about the distribution of the HOP token when it hasn't even been announced yet. So, people are never going to be happy. That's like kind of like the takeaway from this. But I think that airdrops are kind of, I guess, like an overplayed thing at this point. And Mooney actually made a good tweet about this, and we kind of got into a discussion about where he said, I don't think airdrops are as effective as they once were unless the goal is to just get float out. If it is, then release airdrop schema, have community check it's clear, edit if necessary, re-release drop. And I agree with him here. I think crypto suffers from this thing where the meta game changes so frequently because crypto moves so frequently as an ecosystem, and all of these trends get played out like really, really quickly. And I said that to Mooney in one of my replies where I said, I agree with you, but I think given how fast this industry moves and how fast the meta changes, it's basically a euthanasia roller coaster for every single thing. Yield farming, airdrops, the L1 trade, everything in this industry just gets completely farmed out, completely speculated on in a very short period of time. And that's why we have this kind of like phenomenon of a few months where everything is like awesome. Everything's pumping, everyone's making money, it's all well and good. And then that inevitably ends, and then we have a couple years of just like a really quiet period. And these things just always trend in those kind of like directions. And I don't know if it's good or bad. I would say it's frustrating. And I think for teams, it's especially frustrating, especially because they want to do airdrops. They want to get their token out. But it's just never going to please everyone. As I mentioned the other day, no airdrop design is ever going to be perfect. Far from it. And I think that in general, airdrops maybe aren't the way to go for a lot of projects at this point in time. But the thing is, I don't know how to do a good token distribution. I think the best token distributions in crypto are Bitcoin and Ethereum, and I think they had unique circumstances with their token as well. I mean, for one, they had a proof of work distribution phase. They've had multiple market cycles. They launched when, I guess, Bitcoin launched when the ecosystem was non-existent. Ethereum launched when it was still quite small. But because of this phenomenon of everyone knowing the game, right? And because everyone knows the game has to change to make money from it. What ends up happening is that like airdrops just become kind of like these ineffective tools, and as Mooney points out here. So I don't know what the solution is. I think the solution might just still be iterating on airdrops as much as we can and just dealing with the fact that we're never going to get to a perfect kind of like airdrop or token distribution mechanism, and just, I guess, maybe focus on driving value to the token itself rather than the distribution to counterbalance the issues with distribution around that. So I'll have to see how that plays out. Just wanted to kind of like highlight that as well there, because it's something that I think about a lot, especially as someone who is invested in a lot of teams and is privy to some of the information around them. And I get asked like, hey, like what should we do with our token? You know, what should our distribution look like? I always give the same advice in that the distribution should definitely be weighted more heavily towards the community than the core team and the investors. But at the same time, that's not enough. There needs to be so much more done here. And I spoke about Optimism's kind of like token design the other day and how I really like it, but it's far from perfect, guys. And it didn't please everyone. There were still people upset about it, and you're never going to please everyone. I think that if the goal of a team designing their kind of token and their airdrop is to please everyone, then they've already lost. I think the goal should be to get a fair as distribution as possible. Don't worry about pleasing everyone, and then just focus on driving value to that token in any way that you can to counterbalance the, I guess, like weird distribution kind of like stuff that inevitably will happen due to just distribution being a really, really hard, unsolved kind of like problem within crypto. So yeah, just wanted to highlight that. Let me know your thoughts. Jump in the Discord channel. We have like a whole airdrop channel dedicated to this sort of stuff. So definitely kind of like let me know your thoughts there. I'm curious to hear what other people think about this. All right, finally here we have a new feature from Etherscan called the Transaction Heatmap. So basically this lets you get a one-glance view of an address's activity over the last year. So what you can do is you head to any address page, click on the Analytics tab, and select Transaction Heatmap, and you'll be able to see each day of each month over the last year and how active an address was for that month. I actually checked Sassal.eth, and for some reason I was really active in like the last 6 months of last year, but haven't been that active this year. Not sure why that is. I thought I was more active, maybe because I'm using my other addresses more, my non-public addresses and things like that. But you can plug in your address into Etherscan and kind of check it out here. But you can also check out any address that you want to. So just another really nice quality of life feature from Etherscan. And you know, they do lots of these things. I love these kind of like features. Etherscan is still the best block explorer by far, I believe. It's kind of like, I guess I've spoken about this before, but it's kind of like I wish they had competition, but at the same time, I don't think they even need competition because they just keep releasing so many good features. But I think they need competition from just kind of like, I mean, a decentralization perspective. We obviously don't want to just centralize around one block explorer, but they're so good that it's kind of like hard not to, right? So there's that kind of like feature for you guys to check out there. Now, I have a few minutes left. I just wanted to make one comment about kind of like the markets again, just because I've been seeing people kind of like talk about this a little bit more frequently lately. The markets, guys, like, I mean, I've said it before, we're in a bear market. We're in the kind of like this crab market. I spoke about it on the Marathon Refuel did the other day at the end of it, where I said that, you know, everything's still really bullish for Ethereum. There's nothing to be bearish about. But I just wanted to make one comment, and I kind of like I was thinking about this today. If it wasn't for Ethereum in this industry, I don't know what this industry would have to kind of like stand on right now. Like, if you look at everything else going on, what's there to be bullish about? I actually don't think there's anything to be bullish about when it comes to Bitcoin. As I said before, I think Bitcoin has plenty of headwinds ahead of it, not many tailwinds. And then I look at other ecosystems out there, and they're all just copying Ethereum. Like, the L1s are just copying Ethereum most of the time. There are some things going on here and there, but really the most exciting stuff is all happening within Ethereum. The merge, layer 2s, NFTs, DeFi, it's all still happening on Ethereum. And ETH is capturing a lot of that value. And staking, of course, is obviously a big thing. So what else would we be bullish about if Ethereum wasn't out? I don't think very much. I think this industry would still be very small. I think crypto as a whole would actually be very boring without Ethereum. I'm not sure if there would have been even another smart contract platform that kind of like filled the hole there. But yeah, just something that I was thinking about today. I just wanted to kind of like share with you guys as I had a couple of minutes left here. But I think that's going to be it for today. So thank you everyone for listening and watching. Be sure to subscribe to the channel if you haven't yet. Give that video a thumbs up, subscribe to the newsletter, join the Discord channel, and I'll catch you all tomorrow. Thanks everyone.